How's it going, everyone? Happy New Year. This video is going to be about breaker blocks, but before we get started, if you are looking to get access to all my PDFs in one place, make sure to join my free Discord as they are all located in the bottom educational section of that. With that being said, let's hop into the PDF and get started. So we are going to learn about breaker blocks. We will first go over a bullish breaker block and then a bearish breaker block. Now, a breaker block is a candlestick pattern in which we form a low, high, lower low, and higher high. So let's go over that. So the first thing we have is a low, then a high is created, then we create a lower low, and then a higher high. Once we have the low, high, lower low, higher high, then we have a breaker block formation, and then we look for the series or single up close candle here between the low and the high, marking that out. That is our breaker block, and we'll look for a reaction there to continue higher. So let's hop into the charts and go over an example of this. So in this example of a bullish breaker block, we are looking at GU on the 5-minute chart. Now, with a bullish breaker, we need a low, high, lower low, then higher high. Let's see when a low forms. So here we get a potential low, marking that out. Now we're looking for a high. Here we form a swing high. Now looking for a lower low. You can see we've created a lower low, but we want to see when that gets confirmed and put in a swing low. So here we now have a lower low. Now we're looking for a higher high. Here we get that. So now we have a low, high, lower low, higher high. From here, I can mark out the series of up close candles here as our breaker block. Now when price returns to this area, we should see a reaction. Here we retest the breaker block and start to continue higher. We come back, we sweep this low into the breaker block, the bodies are still respecting, and we continue higher. So just to review, we have a low, a high, lower low, then higher high. That formation forms a bullish breaker block, marking out the single or series of up close candles here, dragging it out. This is where I look for a reaction when price retests this area. Now taking a look back at the PDF, what do I look for in a bearish breaker block? Well, I want to see a high, low, higher high, then lower low. From here, I can look for the series or single down close candle, mark that out, and then look for a reaction there. Let's hop into another example of a bearish breaker block. So here we are on EU 5-minute chart, looking at an example of a bearish breaker. Now, if you notice, we have a high right here. We now have a low. We now have a higher high. So now we're looking for a lower low. You can see that never forms. So this does not form a breaker. Now looking at it this way, we have a high, low. Now we have a higher high up here. Now if we form a lower low, here we form a lower low. So now we have that bearish breaker pattern with a high, low, higher high, lower low. So marking out the series of down close candles here, I'd want to see price retest this area and continue lower. And there we go. So you can see price retests the bearish breaker here, then gets displacement lower. Now, one thing that is important with breaker blocks is I want to see displacement paired with them. So for example, I want to see a fair value gap overlined with them, and that is what forms the unicorn model. The unicorn model is where we have a bearish breaker block aligned with a bearish fair value gap. A bullish unicorn model is when we have a bullish breaker overlapping with a bullish fair value gap. So let's go back into that example we just went over and see if we can see the unicorn model. So rewinding this price action, you can see we have a bearish breaker block right here, and we have displacement through this breaker block. You can see we create a fair value gap here. Now this leads me into my next lesson, which is stop losses. So let's hop back into the PDF before we finish this example. So when placing a stop loss, there are two things I really look for. I look to place it either below the bullish breaker block and the fair value gap that is created there, or at the swing low or high. So let's go back into the example and show that. So here, if I was going to look to take an entry, there are two things I can do. I can either take an entry at the start of the fair value gap, letting it trade up into the breaker, or I can look to take my entry at the breaker within the fair value gap. From here, I can look to have my stop loss either on this swing high, and if I was going to target 2R, I'd need my take profit down there, or I can look to place it just above the breaker block here, and with that, my 2R would be right here. So let's see how this works out. And you can see we hit 2R pretty quickly with that. And if we go back to our initial take profit using this swing high, it would have just missed our take profit and then stopped us out. So you can see there are benefits and drawdowns to each stop loss placement. However, that is up to you to decide what works best for you. Let's take another look at an example of a unicorn model. So if you notice here, we have a low, a high, a lower low. So if we form a higher high, we will have a breaker block. And here we do form that higher high. Now we can mark out the series of up close candles here as the breaker block and look for that to be retested to move higher. And what do we have right here? We have a fair value gap overlapping it. So the one thing we have to decide here is, do I want to place my entry on this breaker block here to get filled with my stop below the breaker low, or do I want to wait and place it at the fair value gap here to get better risk to reward? Now, if I want to be in this trade, I will take this first entry and allow my stop loss to let it trade back into this area. So if this is my entry, I'll look to target 2R with my stop loss just below the breaker low. Here we get filled in. And here we hit TP. Now, if you notice, it never reached back into this fair value gap here. So this is where it kind of comes up to user discretion. Do you want to wait for that fair value gap entry to get better risk to reward? Or do you want to be in the trade and allow it to trade back down before going higher? Now, the last thing with this example is you can see how this stop loss makes much more sense than looking to place my stop loss at this low here. If my stop loss was at this low, I would need to have a take profit all the way up here to reach 2R versus placing it just below the breaker here. I get my 2R right here. Now let's take a quick look at the differences between a breaker block and an order block. A breaker block is the series of up close candles here, and an order block is the series of down close candles here. With a breaker block, I mark out the whole series of the candles, including the wicks, while with an order block, I will just mark out the opening price in that series of up close candles. So in this example here, the rectangle would be the breaker block, and the blue line would be the order block. They are going to refer to price action at a similar level. However, they are different concepts. So for example here, my entry for the breaker block would be right here, while the entry for the order block would be right here. So you can see both would have worked out. In this case, the order block did catch the almost very low, but they both have their uses. It really just comes down to personal preference. The next thing I want to quickly discuss is using breaker blocks alongside projection. If you've seen my projection video, you know we can project the manipulation leg to give us targets. So where is the manipulation leg in the breaker? Well, we have a low, high, lower low, higher high. This leg down that created the lower low is our manipulation leg, and I can project that out to this high right here. This gives me levels to target. For example, looking for price to reach to the 2 to negative 2.5. So in this case, if I was to take an entry on the breaker block with my stop just below the low of the breaker block, I could look to target either 2R, which I would have taken right there, or I can look to target these projections right here, giving a 4R trade. You can see how we hit those projections there. We get a little retracement and eventually go up and reach for the 4 to negative 4.5. So now let's hop into a final example where we will go top down. So in our first top down example, we're going to be looking at that same GU trade on the 5-minute and showing the higher time frame context. So taking a look at this price action, what do you see? What I see here is we have a sweep here at the low, and then we have displacement up. Now taking what we just learned in this video, what else do we see? We have a low, high, lower low, and then we create a higher high up here. So what are these up close candles right here? A breaker block. So now we have a breaker block overlapping with a fair value gap or a unicorn model on the hourly chart, and we just entered the London kill zone. Let's hop down to the 5-minute chart. So down here on the 5-minute chart, now there is a little bit more context to our first example. What do we see here? Well, we see a low, a high, we make a lower low into an important level. Let's see if we get displacement out. We do get displacement out, creating a higher high So now we can mark out that breaker block. Now what else do we have? We have a fair value gap here. So if I was worried about missing this trade or I really wanted to get in, I could look to take my entry at the start of that fair value gap, my stop at this low, and then I could either look to target 2R, which is right here, or these highs, or I can also project out that manipulation leg. So projecting that out, let's say I'm looking for the -2 standard deviations. Now we're at a 3.62R trade. So let's see how this works out. And there we hit our take profit. So you saw this example prior, but zooming back out to the hourly chart, now you can see the context of why I'd be looking for a trade here. We have a higher time frame PD array, and simply put, we're moving from internal liquidity to external liquidity on the hourly time frame. In this next example, we'll be taking a look at a unicorn model on the hourly time frame. So you can see here we have previous day low resting right here, which we created equal lows. So if this is not taken and we retrace back into this previous range, that is an opportunity to short. Now, what else do we notice? We see a swing high being ran right here. So we have a high, low, higher high, lower low. So what are these down close candles? Those are a breaker block. So marking those out, what else do we have overlapped with them? A fair value gap. So if I did not even want to go to a lower time frame, I could look to take an entry right here. I stop on this high and then looking to target equal lows. So let's see how that works out. And we would have gotten filled in right there. And there we would hit TP. In our last top-down example, we're starting on the ES 60-minute chart. And if you notice, we have a fair value gap that's been respecting here, and we have sell side liquidity or sell stops resting here. We drop down on the hourly chart and we sweep that, close back inside. So let's drop down to the 5-minute chart to look for a long setup. So here on the 5-minute chart, what do we notice? We have a low, high, lower low. So let's see if we create a higher high. And there we create a higher high. So where is our breaker block? This series of up close candles here. We also have that aligned with a fair value gap here. So looking to take an entry at the fair value gap, my stop below the breaker and targeting 2R, it would look something like this. So let's see how this works out. So here we get filled. And there we get stopped out. So you can see in this example, we swept sell side liquidity after the open. We displaced through the breaker block, we created a unicorn model, took an entry, and then it stopped us out. Losses are inevitable in trading, and that is why I show this example. I hope you found this video beneficial. If you did, please consider liking and subscribing, and I'll see you guys next week.